the Trading Market Technicals morning call video for Thursday, May 23rd. Please excuse my voice. I'm a little bit under the weather, but I wanted to get this video out. It's kind of important what was going on from yesterday. Tomorrow there will be no morning call video. Morning call videos will resume on Tuesday. Okay, now let's get back to the markets. We had a nice reversal day yesterday in the marketplace, and that was based on Fed Chairman Ben Bernanke kind of struck a little bit of a less dovish tone during his congressional committee speech. And basically in the Q&A portion, he noted that he felt that some tapering of QE could begin over the next few meetings, and if labor markets improved and support such a retreat. Now, that's all you need to hear. We have people buying the market based on Ben Bernanke buying his QE asset purchase program. So when you have that, and only that, not because of fundamentals, right? Yeah, you can argue, fundamental analysts, they say, oh, the economy's chugging along, it's doing well, doing great. Not necessarily, if you really dig down into it, but that's another discussion. We're here on a technical basis. And then the FOMC minutes came out from the May 1st meeting, and there was a lot of members saying that, hey, you know what, we could be open for reduction of bond purchases by the June meeting. That's all the markets needed to hear, and the market started clearly reversing course. Now, that is a catalyst, and that's something that I said we have to use caution. I did mention yesterday, I said, guys, we are in a holiday week, so look for a reversal. And a reversal could be anything. You just need a little catalyst to spook the markets, and the markets reverse. Now, are we going to reverse and we're going to sell off now until the end of June? Who knows? But it is a start. We did get a down day, and markets were down. Dow down 80, Nasdaq down 41, S&P down 13, gold down 18, and the almighty buck up 50 cents. So dollar had a great day yesterday. So this is a good start of what is to come, and that's why I personally am just day trading intraday, because I'm not looking for that risk exposure. Why? Well, right now, as I'm recording this, the markets are down. The minis, the E-mini S&P future is down 18 and a half handles. That means that is a big gap down for today. Now, we could flush, but more than likely the day's going to be pretty much over unless we get a bounce, a dead cat bounce that we can short into, and that's going to be the strategy for today. We're going to look for where the market opens. We look for a bounce back up, and then we would look to either reshort the market, or if the market really dumps on the opening, then you would probably look to buy the market. Okay, and that's, again, this is strictly day trading, nothing for the position trader, swing trader, or the long-term investor, obviously. Now, if you are a swing trader or a long-term investor, you have a little bit of decision making to do today. What you're going to ride the storm out, and that's why I say buying puts that was so cheap, because the VIX was at 12.5 was just an ideal situation. Anyway, moving on. Last night, and why did we have the markets down 18 and a half handles? It really wasn't because of yesterday as well. But, and I did mention for many, many months now, China will be the canary in the coal mine. Well, China May HSBC flash manufacturing PMI came in at 49.6 versus 50.4. That's a big miss. And that's the first contraction in 7 months. And the Chinese government, they're pretty good manipulating their numbers. And why? Well, the markets are really at pretty much, globally at their highs. And they start releasing their numbers, their true numbers, when the markets can afford a little bit of a dip. Well, the Nikkei Japan index crashed last night, down 7.9%. And that's why we have a risk-off environment throughout the whole world, actually, overnight session. And that's why the E-minis are down 18 and a half handles. Just like this, overnight, in one day. Do you see what I mean? You gotta really understand your trading plan. Make sure that you adhere to it. And if you're willing to take that risk on and riding that roller coaster, then fine. There's nothing to do. But me personally, I'm not looking to wipe out one bad day of months worth of gains. So anyway, enough said. Just want to say that China will be the canary in the coal mine to set off another sell-off in the marketplace. Okay, now let's get into the technicals. We have here our NIMO, which our trusty NIMO here. Now I want to show it to you. Why? Because I want to show you that we are not even close to being oversold. Oversoul is going to be down here at 90, 80, 70. We could easily get to that this morning, but we'll just see what happens by the end of the day, by the close. But remember, guys, we have today and tomorrow, and we have a long weekend. What's going on now? I don't think people are going to want to hold stocks over the weekend. It's just a guess, nothing tradable, but just keep that in mind. Okay, now let's take a look at the tick. Great reader. This is the end of day. I also look at the tick during the course of the trading day. You might want to look at that as well. And we had a big tick, big move up. This is end of day data now. On the daily, boom, we had a move up, and look what happened. Boom, just dropped right down below. Now we're just above zero. We're not even oversold here at all. Tick has plenty of room to run to the downside. Hence, that I would look for probably a 1600 target to begin with to look for any type of pullback. Now, again, one day doesn't make a trend. We did do some technical damage on some of the sectors, but nothing. Most of them are holding the 8-day moving average, which I'll show you, which we use. Let's take a look at the VIX. The VIX had a nice big up day yesterday and closed up at 45 cents at 1382. So real nice day on the VIX. And now if the VIX starts to really pounce and start really breaking outside this band, and if the next day we close in the band, that'll be a buy signal for equity. So we just want to keep close tabs on that. Okay. Now, speaking of China, let's take a look at FXI. Now, this is yesterday. This is not what is to come today. So we had a big red engulfing candle. Now, if you look at it, high, not even close. The FXI haven't even close, maybe 23% of this whole move, maybe 38%, excuse me. So they're in trouble. And, and the market's fine. When the markets are in this euphoria of buying and they don't care, they buy everything. Well, they're going to care because the markets now have trapped a lot of longs. If the market does sell off now, remember, if. We'll see what happens today. Yes, the markets are down big in the overnight session, so we'll see what happens today. But it doesn't look good for the long players that have been buying this market all the way up. Let's take a look at the emerging markets. Same thing. Emerging markets a little bit better though. Almost got up to fulfill this move lower. But I'm sure emerging markets are going to get hammered today. Now let's take a look at the dollar. And it's the almighty buck back in play again. And you're going to see this inverse correlated effect because when the markets start to get hammered, people run to bonds and they're going to run to the buck. They're not going to run to the Japanese yen, which has been Bank of Japan has intervened and devalued their currency. Swiss franc is gone. They are pegged to the euro, and now it's the almighty dollar. So you're going to see the dollar really start to take off here soon. Okay, now let's take a look at our markets. Yesterday I said 1650. Watch for a break and close below that. We are literally at it. 1653. We're right there. And this is in the cash now. This is the SPX. So we do have some movement here. And let me just, it's a lot going on. But I just really want to show you where we are here. And if I just go like this, we hit the lower end of this. And we hit the 8. You see that blue line right here? That's the 8 right there. That's the 8-day moving average. That's the momentum average. And here we are here in right at the bottom of this trend line. So right now, technically no technical damage in the S&P. Okay. SPY daily, same thing, held it. But this morning, if we were to open now, we would be way below the 8, probably catching the 20 or near the 20. Now we also have this trend line. Remember this uptrend line that we're just really right into that. So we want to keep close tabs on what happens. Today we could do some damage, no question about it, if the market doesn't recover. Here's a 30-minute spiders. As you can see, we popped up, rolled back down again. We drifted higher right into 2 o'clock, and then sold off pretty much all day yesterday. So my scenario, what I was looking for, played out right literally to a science because. Yeah, I'm sorry, you just can't go up every single day. And I looked at the momentum indicators were just starting to literally weaken. It just couldn't really push anymore. And then you need a catalyst, and the catalyst was Ben Bernanke and the FOMC minutes. That's all you need is take an excuse to take profits. Here's the 15-minute just to show you a little bit closer. And as you can see here, we popped up, bear flagged, and then we broke down. And when we took this out right here, 167.83, that is basically your cue that we have now clearly reversed an uptrend and now we're looking to sell rallies. Unfortunately, there wasn't that many bounces that were in play. We caught this little area here, the 200 period, and then we literally just stayed there for about an hour, and then we just dumped at the end of the day, and then rallied back with some profit taken in the shorts. Okay, transports. Transports did break the 8, so transports are weaker out of the 5. They are our leader and not looking too pretty. So let's just see what happens. We'll take it one step at a time. But really exciting to see a little volatility come in this marketplace. I'll tell you, if the volatility can pick up, we can really do well in the markets. Okay, now we have here our IWMs. Again, a little bit weaker than expected, but like I said, we are still, and if I just get that right there, we're still within his uptrend and his uptrend channel. So just something to keep an eye on, all right, on the IWMs. But again, also weaker as well. Diamonds holding the 8, so that's not doing too bad. And then, of course, we have Goldman Sachs. Goldman, clearly a big reversal, big inverted hammer. And now we need to take out yesterday's low, 158.58. We take that out, we'll easily see the 8, possibly the 20. So we'll keep an eye on Gorman. Gorman might be a great candidate for a retracement. And then, of course, the XLF, as you can see here, XLF actually broke down from its trend channel, but again, it is also holding the 8. Now you can see the 8 is right there. Let me just move that away. That's the 8. So technically, no damage really. We did have a little bit of weakness in the transports, but let's keep an eye on today. Today's going to be a tell sign of what's going to happen here. Okay, Apple. Still with it. Apple held up really well, I have to say. Apple actually closed positive. Now, we're down 5 this morning on very little volume. So, Apple, let's see what that does. If Apple starts to break this 418, then I think you're going to have a deeper downside correction in Apple. But it looks like for now, believe it or not, it looks like selling subsided. So, we'll see. We'll keep an eye on Apple. And then lastly is the Qs. Qs did hold that 8-day as well. So we have weakness, real weakness in the transports, which is our leader. Really, guys, we want to pay attention to what's going on. Do not short at the opening. It's not worth it. The markets are extremely overextended already in the overnight session. They're probably going to open deep in the hole. That's probably where you might want to look for a strong stock from yesterday and look to either buy it, okay, and or wait for the market to retrace. Any weak push higher would be a cue to sell rallies. Okay? Have a great day, everybody. We'll speak to you tomorrow. Take care.